Nearly a century ago, Henry Ford indicated that it was for the best that the majority of Americans did not understand how the banking system operated because there would soon be a revolution. The quote by Mr. Ford appears to still hold true to this day, even though it was said almost 100 years ago. This is not to suggest that the concept of banking is bad. No, banks do offer us a lot of helpful services and are now a useful part of our lives. Everyone wants to safeguard their money in a safe place. It's probably not a good idea to stash your cash under the bed. Likewise, you don't want to bury your money in a ditch in your backyard. The truth is, the banks are raking in a lot of cash, usually at the expense of the general population. But because the banking institutions follow strict and complicated operating procedures, some odd methods are sometimes kept out of the public's view. Regardless of whose side of the argument you support, the fact remains that we are all involved in this situation. There are plenty of methods for the banks to profit from you, whether you're taking out a loan, spending your money, or saving it. The sad part is that you are unaware that you're being duped. One of the reasons why bank stocks have become a favorite among investors is the variety of income sources that the banks benefit from. Here are several financial facts that banks don't want you to know. The 5 financial facts about money. Number 1. You're losing money every year. Although you've probably heard that banks are the finest places to store your money, no one has ever told you that doing so results in a yearly loss of money. This has nothing to do with the charges you incur for your purchases or someone taking your money. It is related to inflation. Inflation is the gradual rise in the cost of goods and services. What it means is that something you could purchase now for $50 would cost a little bit more in the near and distant future. If you believe the money in your account is secure, you would assume that the value would either stay the same or increase during the year. Every investor wants to keep up with inflation due to interest, but this isn't always the case with bank accounts. Inflation in the US is essentially at 2% on average. If the interest on your savings is only 0.05%, you're actually losing up to 1.9% annually on the value of your money. I'm not referring to the money you put into a few financial platforms in hopes of getting returns. Instead, I'm referring to the money that is just sitting in your bank account. Number 2, your bank account balance is not actual money. Even if you have a large sum of money in the bank, they're just digits in electronic records. This is so that banks may conduct business using your money. They distribute this cash in the form of mortgages, business loans, or automobile loans. While your money appears to be at the bank, in reality, it is earning additional revenue for the bank in other places. During the recession in 2008, this truth became obviously evident. People went to the banks in a state of panic demanding to withdraw their money, but the banks were cash-strapped and declined a lot of them. Even if the banks have that much liquidity, there won't be any physical currency available if there's a crisis and everyone rushes in for their money. This results from a policy known as fractional reserve banking. This policy permits your bank to lend your money to those in need as loans and mortgages. Does this signify that banks are not at all a secure place to keep your money? Actually, insurance protects your money. Additionally, the government is ready and prepared to intervene if necessary. Therefore, if you have money in the bank, feel free to close your eyes and sleep well tonight. The thing you need to understand is that depositing money in the bank is not the same as putting it in a box that you can access whenever you want. Not for you this time, but for the bank. You can access your money whenever you want as an individual, but if everyone requests money at the same time, nobody will receive it. Number 3, banks earn money from every card transaction. First, banks get paid through processing fees each time you use your credit card or debit card to make purchases. You might not be aware of this as you were only charged for the items you actually purchased because the merchant pays the additional fees. And because they wouldn't want to lose money, the merchant may have additionally added these costs to the sales price. Consider it this way. Imagine that you spent $500 on an item, which you paid for with a credit card. If the merchant is charged a 3% fee on each credit or debit card transaction, the bank will receive a hefty $15. The bank receives this money simply for offering the devices and the ease of payment. Do you think the merchant will enjoy the $15 being deducted from their profit? You are the one paying this cost, and I'll explain how. Suppose the item was meant to be sold for $480. The company must have increased the cost to $500. The extra $20 will pay the 3% bank fee for card purchases. And that is understanding that the vast majority of people would prefer to use their cards for payment. Secondly, the bank makes big profits from your credit card. There's a reason why the banks provide so many benefits to lure you into applying for a credit card. You may not be aware of this, but the interest rates on your card may increase at any time. The average credit card interest rate is 17%, but your bank may decide to raise it to 18 or 19%. The only thing they are required to do is give you a 15 to 30 days notice. Typically, most won't even read these letters since they are filled with so much legal jargon. The banks get away with it because you ignore them, and they profit immensely from your ignorance. If you have compound credit card interest, it will just continue to increase. This will eventually turn against you in a negative way. If you don't pay off these bills, your financial situation will just get worse. I'm not saying that the concept of a credit card is inherently wrong. No, using a credit card is a convenient and beneficial service. For the majority of us, it has become a part of our everyday lives. However, caution should be used to prevent debt accumulating. This could be problematic. Ensure that you pay off your debts in full each month. Number 4, foreign transaction fees. Foreign transaction fees are another method that most banks profit from their customers. Your financial institution won't let you know this, but using your credit or debit card to make purchases while traveling outside of the United States will result in additional charges. A friend once traveled and spent 15 days outside of the United States. He viewed his bank statement upon his return and was floored. He discovered foreign transaction fees charging a total of $105. The majority of banks won't tell you about all of this because if they did, you might decide to leave them and seek out other financial options. Some credit card programs offer coverage in countries other than the United States. If you utilize their services in nations where they offer coverage, there won't be any further fees for your purchases. However, my friend was gouged because he was unaware of this and wasn't a part of any such program. Number 5. You are being watched. All of your financial transactions are monitored by banks. According to the law, financial institutions must notify the IRS of any questionable activities. This rule was implemented to prevent unethical transactions like money laundering. Any deposit or withdrawal above $10,000 must be reported to the IRS. If an audit of your account is required, the IRS will issue out inquiries requesting an explanation for such transactions. The first thing that officials want to know is if you paid taxes on the money. They also want to know if the transactions were carried out legally. So be aware that you are being monitored no matter what you do with your money. This information can undoubtedly aid in your ability to stay in compliance and avoid difficulties. Be sure to check out our other videos to get information and motivation you need to achieve financial freedom. This concludes today's video. If you like the video and this kind of content, please subscribe for more just like it. Well, with that stated, enjoy your day everyone, and I'll see you in the next one.